Hey traders, welcome back to Valareso Capital. On today's video, we're going to go through the market update. We're going to take a look at some of the most important levels that I'm going to be watching for the main indexes. And then of course, the purpose of this video is to create a roadmap for next week. That way we can stay in the path of least resistance and put the odds in our favor to make profits. If you're interested in this information, make sure to stick all the way through this video. So before we continue with the video, guys, remember that this is for informational purposes only, is based just on my personal opinion and is not financial advice. So the first chart that I want to start here, and also before I say that, if you find any value in these videos, guys, remember to subscribe to the channel. That way we can reach a bigger audience and help more traders in their journey. So now let's jump. We usually start our videos with a chart of the SPX. And if we recall last week's video, we were talking about the possibility for an oversold bounce in the market. So let's jump quickly into the SPX. Right, guys, remember that we were talking, if you can see right here, you can see that the entire week, this is the entire week that we had. And when we made last week's video, we were talking about the possibility that the market was really extended to the downside. Remember that we were talking about the close, the gap that we closed on the SPX, how we were really oversold in my indicator. Remember, guys, that I told you that it is pretty rare that my indicator goes all the way to that 30 level, meaning that we were greatly oversold. So the possibility of a bounce was there, and that's what happened. So that's actually pretty nice to see that we had that bounce. You can see right here that the SPX from this level right here, we had a really nice bounce that came into that declining moving averages. So that's very important to understand, because if we take a look at the market, and it's actually pretty easy, I like to keep it as simple as possible. You can see right here that when the price is above these key moving averages, the path of least resistance is to the upside, right? So most of the time when price is above these moving averages, which are basically the Fibonacci sequence, right? I use exponential moving averages. I'm using the 8 exponential, 13 exponential, I'm using the 21 exponential, and then I'm using the 34 exponential. So pretty easy. I just keep it super simple. Use Fibonacci, the Fibonacci sequence. I have found a lot of success using it. So going back to the price action, when we are above these moving averages and we're trending higher, then the path of least resistance is higher. But when we break these moving averages, especially the 34 moving average, you can see that we had a pretty steep pullback, happened really fast, and now we're testing these exponential moving averages, but we're testing them from below. So the expectation is simple. The expectation is that there is a high probability that we're going to continue to see some resistance in the market, especially since the SPX continues to be below a 50 daily moving average. And you can see right here that my indicator reverted all the way back to the middle. That means that we're no longer oversold, but there's a probability that we're going to see resistance in the market. And I also do have a couple of levels here. You can see right here this level, which comes basically at 5,100. This is a Fibonacci 0618 retracement measured from the most recent swing to the upside that we had here all the way to this swing to the downside. So we have a couple of levels of resistance. We have this 5,100 level, we have the 50 daily moving average, and then of course we do have this Fibonacci retracement as a level of resistance. So if you ask me, I would say that for now this move to the upside is just basically an oversold bounce with some short covering, and we have to take that into consideration, right? The market is basically just reverting back to the mean. So let's go back to the Qs, which is the chart that we were taking a look at the beginning of the video. So what I find really interesting in the Qs, and let me just show you how amazingly the 34 exponential moving average works. You can see right here that we had this pullback right into that 34 exponential. We had another test here, we have another test here, we had a test here, and then of course we ended up breaking this exponential and then moving to the downside. And now basically, if you just track this 34 exponential moving average, you can basically see that now we're testing that 34 exponential moving average from the underside. So just keeping things really simple, guys. Just looking at price action, keeping things as simple as possible. This is just a setup, and just looking at this, I would say that the probabilities of this 34 exponential acting as resistance, at least for some back and filling, it's pretty high, right? This doesn't mean that we're just gonna go to the downside, make new lows, but the probability that we're gonna see a little bit of back and filling in the market, I think that's high. Are we gonna continue to the downside? Maybe. Are we gonna do some back and filling and then move to the upside? Maybe. But I wouldn't think that sizing long positions right against that 34 moving average is a really high probability thing to do. So I would say that the path of least resistance going into next week is gonna be to the downside. Now of course you can also see that I do have a zone here. This is a Fibonacci zone, is the 50% retracement to the 0618 retracement, which is basically the retracement zone that I tend to see that works really well for some resistance, for some support. You can see that I measure this zone from this high here to this low here, and you can see that the zone comes right at this level. So I do think that there's a high probability that we're gonna see resistance. And then of course, if we take a look at my indicator, you can see that here we were talking about this chart last week. We were oversold, but we are no longer oversold. We are coming right into resistance as we are reverting back to that middle of the indicator. So I do think that the probability of a pullback, at least on back and filling, is actually pretty high. Now, before we take a look at the UVXY, we tend to take a look at that chart. I do want to take a look at some of the red indicators that I watch. Going into last week, I don't remember if we took a look at this chart, but going into last week, this is the 5-day average. This is the 20-day average. You can see that going into last week, we were pretty oversold. So we're no longer oversold in the market. So any technical oversold bounce is no longer valid in the short term, as we are no longer oversold. We're basically just back at normal levels, 50 levels in both of these indicators. So I would say that the probability of a pullback increases since we are not oversold anymore in the market. And also, if we take a look at this, and I want you to take a look at this chart down here, these are the summation indexes, basically the McLean indicator. And this is basically when we tend to have a move below that 10-day exponential moving average in these summation indexes, we tend to be in a downtrend, right? That means that we have more declining than advancing stocks. And this is basically just a pretty strong signal. You can see that here that we are starting to hook a little bit to the upside, but we continue to be below that moving average, and I have found a lot of success using this. So this also continues to be in a sell signal, and I do think that we have to pay attention about it. And now let's take a look at the UVXY. I don't know if we have a lot of info in the UVXY. Let me see what this chart looks like. Yeah, not a lot of info, right? Sometimes we do have patterns that are pretty easy to understand. Remember that we were talking last week about this divergence in the UVXY. Since the UVXY did not advance as the market continued to move to the downside, that was actually a pretty strong signal. You can see that the market, we had a pretty nice bounce. But right now in the UVXY, not a lot of info. I don't think that it is very important to watch this. We do have this kind of doji candle. If we happen to open here, that would trigger an abandoned baby setup. Could lead us to the upside, but not a lot of things, not a lot to watch here. So I think that would be it. I do want to take a look at the semiconductors. The semiconductors also, you can see right here that we came all the way down. We were oversold as well, and now we had a really nice bounce, but we're coming right into resistance, right? You can see right here that we're coming right into this breakout, into this zone that we break down from, and you can see that we're coming right also into that 50 daily moving average. So I don't know, I don't see this level as a pretty high probability level to build some really big long exposure. I would prefer to see some back and filling, see if we can form a little bit of a base here, perhaps just below this level, and then break to the upside. Perhaps we're gonna see that, but I do think that we are at resistance. So in conclusion, guys, the part of this resistance, in my opinion, going into next week, perhaps we're gonna see some back and filling. So I would say that the market right now is at resistance. So that will be it for the video, guys. I hope that you have an amazing weekend, and thank you so much for your time. I will see you in future videos. Take care and bye bye.